Hello traders, this is Chris from AAAAFx taking a look at the upcoming December 11th trading week. First, I'll go through the calendar to give you an idea as to what we could be looking at as market movers, and trust me, there's a lot. So Monday, we do have the speech coming out by Reserve Bank of Australia Governor Bullock. Probably not a big mover in the big scheme of things unless he happens to say something that the market doesn't anticipate. Even so, more likely than not, it would end up being a bit of a localized issue with the Aussie dollar itself. As we go into Tuesday, things start to heat up a little bit. You get the claimant count change, that's unemployment numbers, coming out of the United Kingdom. Could have an influence on the pound a little bit, maybe the FTSE 100. That being said, again, this is a situation where we have so much noise later in the week, it's probably somewhat muted. CPI numbers giving us a read on inflation in America, probably more of a mover than the claimant count change in the UK because the situation with the Federal Reserve and whether or not they're going to hike or whether they're going to let it go. Wednesday is when things really start to pick up. GDP in the UK, another potential mover of the pound and the FTSE. PPI in the United States probably will be ignored because we have the Fed later. Now, the Fed isn't expected to do much, but it's the statement that people will be paying attention to. What does Powell have to say about the trajectory of the Federal Reserve? After all, traders are concerned about higher interest rates for longer, and that, of course, could cause some issues. Later in the day, we get GDP coming out of New Zealand, probably a localized incident with the New Zealand dollar. The Fed, though, that could be a huge mover of markets in general. It won't be just the U.S. dollar, and it won't necessarily be just U.S. stocks. However, when you think the smoke clears, the next day on Thursday, we get Australian employment figures. Again, probably localized. But then we get the Swiss National Bank coming out with an interest rate decision, localized to the Swiss franc, obviously. But then we get the Bank of England interest rate decision, press conference, etc. We get the ECB decision, all back to back within a few hours of each other. Expect Thursday to be mass chaos, especially when you're talking about currency pairs like the British pound, Swiss franc. You could just have markets going all over the place during the day. You could see rips of 100 pips in one direction, only to see a turnaround and rip 200 in the other. We eventually get retail sales and unemployment, the weekly unemployment claims out of the United States. That could move the stock market, but I would anticipate when you marry all of this central bank noise with the fact that, we may not have as much liquidity because people are going to be focusing on the holidays, sets up for a really potentially nasty Thursday session. Friday, we have industrial production out of China. Let's see how the global economy is doing. If that starts to drop, it's not a good look. It's expected to be 5.7 year over year. It's expected to grow from the previous year, or the month from the previous year. So we'll have to see how that plays out. Then we get PMI numbers coming out of Germany, France, UK, United States, Empire State Manufacturing Index. That can move the market. Generally doesn't, though. And then Canadian Governor Macklem speaks. So a lot going on during the week that could really kind of move markets. With all of that being said, let's take a look at the charts. British pound had a relatively tough week. We did see a lot of U.S. dollar buying on Friday, and it really kind of caused a little bit of chaos. You can see we're still kind of hanging around this 125 level in the pound. I suspect that changes next week with both central banks speaking, but, we'll have to wait and see. That may or may not be the case. So I'm marking 125 as an area of interest. I really think that you're probably going to see a lot of volatility. It does look mildly positive, but clearly there has been a significant pullback. Euro fell pretty hard, especially on Friday after that jobs number. 1.0750 is an area that I think attracts a lot of interest, mainly due to the 200-day EMA, if nothing else, and the fact that we do have a certain amount of market memory back in this area that traders will be paying attention to. So keep that in mind as well. 108 being, if we can break above there and somehow navigate the minefield of central bank noise, 108.5, and then possibly 110 could be your target. 107 gives way to selling pressure. We are more likely than not going to continue dropping. Dollar yen had a very interesting 48 hours. Thursday, it looked like the thing was going to fall apart completely. Buyers stepped in to defend the 200-day EMA, and we have seen that kind of prove itself again during the day on Friday. We initially pulled back and then turned around to show signs of life, with 145 being an area of interest. I think this could be one of the more active pairs over the next week or two, mainly due to the fact that we have that FOMC statement. But we also have a lot of people out there speculating that perhaps the Bank of Japan is going to try to normalize rates. Their meeting is on the 19th. It's the following week. So we kind of have to get through all of that to get any type of clarity. It looks like the market has kind of called the bluff of the BOJ. So we'll see. Short term, probably have more possibility of going higher. But really at this point, how much higher, I don't know. I would anticipate that there is some significant resistance at 147.30 or so, 147.25. Top of that Thursday candlestick. If we can break that, that would obviously be a very bullish sign. Aussie dollar chopped around all week. There's your weekly candle. It did have a little bit more of a negative tone to it. 65.65, that is, I think, is an area that you have to pay a certain amount of attention to. There's a lot of psychology attached to it, obviously. So 50-day EMA there as well. So I anticipate that even if we do break down in this pair, that's probably going to offer a bit of support. My suspicion is that the Aussie probably, unless the dollar really takes off or melts down, I think we're just going to look at the Aussie through the prism of perhaps more choppiness than anything else. Dollar CAD weekly has bounced from that crucial 135 level. Canadian dollar, of course, influenced by oil. I suspect that if we can break this little area here at about 1.3625, that allows the U.S. dollar to rally, with the understanding that we are going to see a lot of noise ahead of that and directly after that FOMC announcement. But I do think that could send this pair higher. We do need to see oil recover quite nicely to see us break down below the 1.35 level, or we need to see bond yields collapse. U.S. dollar had a nice gain against the Swiss franc. Friday was a significant breakout. Will it hold? We have to see whether or not we can hang on to this little area right here as the one area here right around, what is that, 87.75, I think needs to hold. If it does, then it's likely that we could go higher, perhaps reaching towards the 50-day EMA. Remember, there is a Swiss National Bank meeting, and if they try to talk down the value of the Swiss franc, which they don't like the franc being as strong as it is, we could send this market higher. Over here, the DAX continues to just defy gravity. We are definitely needing some type of pullback. Regardless of what you think about the DAX, you can't be a buyer up here. That ECB meeting could be a reason for this market to turn around. We'll have to wait and see. But, unless you're comfortable buying something that's risen 15% in just a couple of weeks and is currently at the 85 level on RSI, You just can't get involved. It doesn't mean you short it, because you could have made the same argument here. The DAX is probably something that needs to be left alone. The FTSE 100 fell during the course of the week, turning around and showing a bit of a hammer for the week. But we did break a little bit of resistance here. I think the FTSE 100 goes looking towards 76.85, perhaps gaining, what is that, about 1.5%. The 200-day EMA and the 50-day EMA underneath could offer a certain amount of support. The Dow Jones looks really bullish on Friday heading into the week, but we do see a lot of resistance in this area, so we'll have to wait and see. I think the Dow Jones is going to be more of the same, in the sense that it is going to be a buy on the dip scenario. Nikkei 225 trying to find support. If it can clear the 32,750 level, we could have a little bit of a short-term rally. Not as bullish on the Nikkei 225 as some of the, like, for example, U.S. indices. Here is the NASDAQ 100, and as you can see, we have had a pretty significant turnaround. Friday was a very bullish day. If we can clear the 16,175 level, it opens up the possibility of the NASDAQ 100 going up to 16,500. I do think that probably happens eventually, but more likely than not, you need to find short-term pullbacks in order to get long, maybe giving you an opportunity to find a little bit of value in what's been an extraordinarily bullish run. Gold has tested 2,000 on Friday. This is going to be about this area more than anything else. The 2,000 level, if it can hold, and, you know, just shortly below it, we could rally towards 2025. If we can break above there, then 2050 would be your next potential target. If we break down below the $1,778 level, then gold probably corrects even deeper. Worth noting, silver got absolutely hammered during the week, so that could come into play as well. Bitcoin is never going to pull back, it seems. It will eventually, obviously, but right now it just looks extraordinarily bullish. This is the hourly chart. I think once you get a couple $100 of a dip, you have to start looking for buying opportunities. I still think that Bitcoin is going to go looking to the 47,500 level. Ethereum, very noisy on Friday, looks a little stretched. The question now isn't so much as to whether it's bullish. It's, do we do the same thing Bitcoin did for a day or two and then rally, or do we get a pullback? I prefer a pullback to start buying. I think 2,100 is a nice floor. But I suspect this is going to be a lot like Bitcoin, where it just doesn't give you that opportunity, unfortunately. So as I look towards oil, oil has rallied on Friday. The weekly candlestick starting to show, the weekly chart does show that we are trying to defend this area. Now, I don't know that we turn around and show signs of life right away, but if we can break above the top of the weekly candlestick, I think that would be a good sign that we have hit the bottom. If you are a fib trader, I suppose you could draw one and see what we come up with. Yeah, like, and we're not even quite to the 50. So there you go. I do anticipate that WTI and Brent will do the same thing. They both have that resistance from the previous support. As I draw the weekly chart here on Brent, same situation, 72. I think it's a hard floor, just as in WTI, 67.5 is. We break that, then that means bad things for not only oil, but the economy. All things being equal, I do think that we eventually try to bounce, but the next couple of weeks might be quiet as it is the holiday season. The S&P 500 almost to an all-time high. We're getting ready to break above there. I do think short-term dips right around 45.80 or so could be an entry. 45.50 could be an entry. I just don't want to short it. Silver, as I mentioned before, just horrific week. I think silver is done as far as the up 10. And that's something that makes me a little bit leery on gold because of that. Natural gas continues to look horrible. Every time it rallies, it gets hammered again. So I think you've got a situation where natural gas just, I mean, sooner or later has to bounce, but right now it just looks absolutely miserable. Looking at the British pound Swiss franc, and the reason I'm looking at this is I think this is going to be a source of a lot of volatility next week. We have a downtrend line that if we break the previous weekly candlestick, that's a very bullish sign. And I think at that point, you could see an attempt to get to the 115 level. Otherwise, I think you start to look for pounds right around 108. I do think that the S&P is going to try to be as dovish as possible next week. Because the Swiss just historically tried to drive the value of the franc down, especially now that we have a lot of concerns out there when it comes to the global economy. People are starting to buy the Swiss franc for safety. Problem is they tend to buy it way too drastically and way too aggressively. It's a pretty small currency, even though it's a major currency. So again, I'm watching this trend line. If we can break that, then I think you have a run to about 115 possible. We'll see. Of course, you have to pay attention to the Bank of England statement as well. But with both of those coming out almost on top of each other, it could cause a lot of noisy behavior. Either way, I think you have to look at all of these markets and recognize that position sizing is going to be your best defense due to the fact that we are in the midst of the holiday season, and that almost certainly means that we will get some type of erratic movements sooner or later. This week is the last week of really massive data dumps. The following week features that Bank of Japan announcement. That could cause some noise, but by the time you get to that point in the month, you are essentially trying to forget about the season. You're staying out of the markets, trying to collect any profits you've made for the year. I'm speaking of money managers, and the markets tend to quiet down. This is going to be one of the more interesting pairs of the upcoming week. Thank you for watching, and make sure to watch, follow, and like our videos.
AAAFx, AAAFx.